there's anything that is strange that I have not said, then structure of statement of cash flow still under indirect method. Most of these things we have already discussed them. I don't want us to bother ourselves discussing them again because we don't need them now that we understand what it is. Then supplementary reporting cash flow from operating activity. This is a direct method. I'm not so much keen about the direct method. You can just review it. I review it just for reviewing sake. I'm not so much keen at looking at that because 99% of companies use the indirect method, but the direct method is very simple. You just look at the outflow, the inflow, add all the inflow, add all the outflow for each of the activities. And the end of it will give you cash flow from operating activities under the direct method. So that should be, in a nutshell, what we should know about cash flow statement, how to prepare cash flow statement. Now we are able to know how cash flow statement is being prepared. So I expect everyone to read this chapter very well, study it again, and if there is any question, anything strange that I know, I have covered everything you need to know about this cash flow statements, starting from operating, investing, and financing. And then recognize the fact that there are two methods to prepare cash flow under operating activities, the direct method and the indirect. We are not so much concerned about direct method because direct method is a layman way of preparing cash flow. Just look at what is inflow under each of the activity, what is outflow. Add all the inflow to outflow under each of those activities, and then add everything, net them, and then add everything for the three activities. That gives us cash flow statement at the end of the period. For indirect method, we start from net income to do the adjustments. Net income, we adjust items that does not involve movement of cash. Most important one is depreciation. We adjust that definitely we have to add it back because it's just like a book entry. We add that one back and then arrive at the position. Then we look at gain or loss on sale of fixed assets. If we recorded loss in the income statement, we have to subtract. We subtracted that to arrive at our net income. So for the adjustment, we have to add when the sale is a loss. And when it is a gain, in a gain, we added it to net income. So in our cash flow adjustment, we have to subtract that. And then we look at the operating assets and operating liabilities. Look at the beginning of the balance sheet. Look at the end of the balance sheet. If there is changes, either the changes is resulting to increase or decrease, we'll add or subtract. That is the final part of our adjustment under net income. Then we arrive at the cash flow from operating activities. Then we move into investment. Investment, now we look at those items like purchase of plant and equipment is a minus, and then sales of equipment, we add that because we were given cash for that. So we do that adjustment as well, and then we arrive at net cash flow from investing activities. Then we move into financing. Financing, we do all the adjustment the same way. Sales of shares. We sell shares. What the company, when they sell shares, they get cash. They sell shares for 5 million, they get the 5 million. So that is inflow. So that we add. And then payment of dividends, we subtract. We subtract because cash has gone out to the shareholders. Then the final position now, we have the net cash flow from investing financing activities. So what you should drive home is 2 methods to prepare cash flow under operating activities. Company value or use the indirect method to start from adjusting from the net income. Then we know that there are 3 activities: operating, investing, and financing. We should recognize activities that fall under those 3 groups. And then we should also recognize what activity is inflow and what activity is outflow. And then we net it, and then we arrive at the net cash flow at the end of that period. Net cash flow from each of all the activities put together, and then we now add or subtract cash flow at the beginning of the period. It's very, very straightforward now. So when we do that, we now arrive at cash flow at the end of the period. That is how every company prepare cash flow. That is how everybody prepare cash flow. Any question on statement of cash flow? Any question on statement of cash flow? Any question on statement of cash flow? Ask the question. Okay, if there is no question, is there any general question you want me to address outside the cash flow statement? Any question? Because this is one of the last topic. What we'll be doing next week is everything we have done from the first week to the end of the week. That is what the chapter 13 is all about. So anything from chapter 1 to chapter 6, we will now bring them up together and work on comprehensive financial statement. I will post a problem where we are going to use to address the chapter 13. Any question? All right, if there is no question, have a nice week and see you again next week. And if you have any problem, any question, please feel free, get me on WhatsApp. I should be able to reach out to you as soon as I am able to read it. Thank you very much, and bye.
Thank you, Professor.
Thank you, Professor. Bye-bye.
Thank you very much. Have a nice day.